Corsair stock price peaked in November last year. Since then, the stock keeps trending down, and today it trades around its 52-week low. Some YouTubers blame EagleTree Capital for the price drop, but it's so not true. The last time EagleTree dumped shares was back in June. For the last 5 months, this venture capital has not sold a single share in the market. In this video, I'm going to explain why Corsair share price keeps falling and what I am going to do with my position. Mr.Alpaca business updates. According to earnings call, Q3 revenue has declined 14% compared with the same quarter last year. But if we compare with last quarter, the revenue has dropped more than 17%. The company blamed container shortage and semiconductor scarcity as the main causes of revenue shrink.
By our estimate, approximately 10% of our natural demand for our components and memory products in our gaming components segment was held back in 2021.
Let's say the demand is still strong as Andy said. Then the container shortage and semiconductor scarcity should be significantly worse in Q3 compared to previous quarters to justify such a drop in revenue. Container shortage does not have a direct impact on revenue. It drags down revenue only when inventory level is running low as a result of a container shortage. However, if we take a look at its inventory level, it actually increases over the past quarters, and Q3 is at its history high. As for semiconductor scarcity, we certainly still have an issue with graphic cards, but it is not necessarily worse than last 2 quarters. According to an article published in October 2021 on PC Invasion, the author Kevin interviewed graphic cards manufacturers, distributors, and retailers, and come up with a report that mentioned, our contact at Micro Center, the retailer, stated that shipments come in regularly on truck deliveries, which stores receive multiple times per week. The takeaway is that the graphic card restocks are now consistent, though shipment quantities remain low for most retailers. This is a different scenario than what suppliers were dealing with earlier in the year. CLX, the distributor, stated that GPU availability is slightly better than it was earlier in the year, especially as cryptocurrency stabilizes and there is less of a rush for components and that demand isn't what it used to be. You can find the link to this report in the description section below the video. So basically, graphic card supply in Q3 was not worse, if not better than previous quarters. If inventory and graphic cards were not responsible for a quarter-on-quarter drop in revenue, it is likely there was an issue with demand. It's fair to say that at least a part of demand from dedicated players had been advanced and released, and there was less demand in Q3 compared with Q1 and Q2. That explains why the revenue has shrank in Q3. Some shareholders clearly saw this coming and cut their position. In my last video about Corsair Q3 preliminary earnings, I explained in details why container shortage and semiconductor scarcity have become a big problem for Corsair. I also mentioned cloud gaming may become a potential threat to Corsair business if the situation continues. That video made me sound pretty bearish against Corsair, but in fact I'm also a Corsair investor, and it is my largest position. I currently have around 4,800 shares at $31 per share. Yes, you hear me right, I'm in the red. If we look at this chart, you will find the average cost for current shareholders is around $35 per share, while the current price is around $27 per share. If you buy the stock today, your cost basis would be lower than 90% of current shareholders. The main reason we are still holding is largely due to its attractive valuation. If we look at its PS or PE ratio, that is crazily low. If you are considering initiating a position or increasing your position, here is what you should know. Gamer and creator segment is getting more momentum and it increases as a percentage of revenue. This gives the business a more balanced revenue structure. The company is investing heavily in research and development. It launches on average 2 new products per week, which brings more opportunity for business growth. The balance sheet looks better with deleveraging efforts compared with pre-pandemic. Its revenue will still be negatively impacted by graphic card supply, at least for the coming 1 year, since most business insiders believe that the situation will not be normalized until the end of 2022. The lack of graphic cards may become a catalyst for cloud gaming, a major threat to its component business. As a long-term investor, I don't turn a deaf ear to anything negative, but rather I listen to all sides of the story and make informed decisions. I believe at the current price, the threat and the weakness have already been priced in, and the share price could break out if there are any surprise or good news. That's why I will still be holding my position.